Welcome to Rock the Crown. This is another episode we bring it to you. It's called Tackling Your Taxes this season. Y'all know we in tax season, so we had to bring you the info today. I'm Nafisa Fudayil, and I'm here with my co-host today, Daia, Naima, Nefertari. We hope that you've had an excellent week so that you are ready for this information to make sure that you are filing your taxes appropriately, you are have your business set up appropriately to take advantage of all these tax incentives that took place during the COVID. And so we're going to get started with bringing you that information. So make sure you get your pen and your paper because note takers are the money makers. And doing your taxes is all about saving on that money. All right, so we're going to get started. We're going to set it up. Basically, we're going to go through all the business different tax initiatives and tax effects of COVID, and then we're going to go into the individual. So if you have any questions or comments or anything like that, please make sure you put them in the comment section. Put them down below. You can send them in later or contact us individually if you have any questions as well. So let's get started. And as we're moving along, you know, one of my co-hosts is a professional. She's an accountant. She's a tax professional. She's a business professional, right? Miss Diane Shakir. So she's going to join me in giving out this information. And my other co-host, Naima and Nefertari, they're going to tell us some questions that some members in our Crown Nation may have. Or also, as we go along, they may have some questions themselves because they are both business owners as well. So let's jump right into it. The first, we're going to talk about the business tax updates from the COVID relief. And the main thing that we want to talk about here is that we know a lot of our business owners were able to take advantage of the PPP loan. And that was one of the loans that was given out by the SBA. And that has a forgivable portion in it where you can apply to get your whole loan for the most part forgiven. Well, that part that is forgiven is not going to be taxable. And why that's important to remember, because normally anytime you have a cancellation of debt, you know, for example, if you have a credit card and for whatever reason you don't pay on it and they cancel your debt, you usually receive something in the mail called a 1099-C, a cancellation of debt. Basically, you have to recognize whatever debt was forgiven or canceled into income. And so that's normally the process. So Congress did have to pass a special provision to make sure all those business owners who received that PPP loan and got it forgiven, that they're not going to be taxed on that forgiveness. So I just want to let our business owners know who had the PPP loan, if you do have it forgiven, you're not going to be taxable on that. And another thing too, yes, ma'am.
Before we go on, how will someone know what portion of the PPP is forgivable?
Well, when they apply for, they have to apply for forgiveness. So whatever lender that they got the PPP loan through, there's an application process that they fill out, and they can go online. Most lenders have those applications online. You just go online and go into the um, forgiveness application for the PPP, and you just walk through and it's forgiven as well. So, but it's a straight application for that. That's how they know. All right. So moving on, another big thing which they took care of with this particular COVID package that just passed in late December was that those expenses that you use when you're trying to apply for forgiveness, right? You have to submit all your expenses, your payroll expenses, any expenses you might have used on any to pay any interest or some type of operational supplies. You have to submit those expenses in order for them to be forgiven. And previously, the commissioner of the IRS said, "Hey, well, if you use those expenses and get them forgiven as part of your PPP loan package, we're not going to let you use those same expenses as deduction when you file your business tax return." So, all those expenses about that you're paying your employee, all those expenses that you're using for, let's say, if you own a building and using mortgage interest, that type of stuff, he was not going to let you take that as a deduction on your tax return. But fixed that. Congress fixed it with the last COVID package that just passed in December. So you are going to be able to get that double benefit of using those expenses to apply for your PPP loan forgiveness, as well as take those expenses again on your tax return as deductions to be able to reduce your income. So that was a huge win for our business owners. Another thing that we want to talk about too, that they corrected this time, is called the employee retention credit. And previously, if you applied for the PPP loan and you received that, you couldn't also apply for this business credit, which is called the employee retention credit. You had to choose between the two, right? So now with the last package, Congress has said you can take both. So you can take the PPP, you can get the PPP loan, as well as apply for the employee retention credit, which is a credit that you take on your tax return. And they did increase that from $5,000 to $14,000. So that is a huge win, a huge benefit for businesses. So you want to make sure, if you're a business and you had any type of employees, that you take advantage of both of those, the PPP loan and the employee retention credit. Let's see what else we have for business owners. Oh, another huge thing for business owners that I do want to make sure that I tell you about is that net operating losses, right? Net operating losses. Now, I don't know if a lot of you remember, but I'm sure you who have losses remember this. But when our previous president came into office and he passed his big tax package, he got rid of the carryback. So normally what used to happen is anytime you had a business and you generated a loss, you can carry those losses back to a previous year when you had income to either get you a refund or get you a credit, right? And so you could carry them back or you can carry them forward, but you don't lose those losses. Well, when Trump came into office, he got rid of the carryback part. So you can still carry it forward, but he got rid of the carryback. So you could only carry your losses forward. Well, with the COVID, because they were trying to really make sure that people were able to have some cash flow, they reinstituted the net operating loss carryback again. So you now, if you generated any losses for your business in 2018 or 2019, you can carry those losses back 5 years. So if it's 2018, you can carry it back to 2013, as far back as 2013. And then, if it's 2019, you can carry it back as far back as 2014 if you had income in those years to be able to reduce, to generate a refund for you, for your business. That's a way for you to be able to generate cash flow. That's a huge thing. And if you didn't have any carryback, no problem. Of course, you can still carry it forward until you have a year where you produce an income. But that was a huge thing for businesses to be able to do. And the last thing I want to tell you about is, remember, for the business meal deduction, you normally, for meals, you had to take 50%, right? So now with the COVID package, you could take 100% of those meals deductions. So that's just some of the things that were passed in this last COVID that would be very beneficial for our business owners out there to take advantage of. With that, we're going to move over to our individuals.
Wait a question.
Our individual tax update.
Before we
Yes, ma'am. You have a question?
Sorry. Okay, so Brother Salim has a question about the business meals. He wanted to know, can you use your Uber Eats classified as your business meals? Like, say, for instance, you really didn't go anywhere, but you did order your business meals through Uber Eats. Can you classify that?
Yes, as long as there's a business purpose for those meals, it doesn't matter whether you were actually at the restaurant or whether you had them at your home office or if you were meeting with someone or doing something like that. As long as you have a business purpose for those meals, yeah, it really doesn't. It doesn't matter, and you keep track of that business purpose. That's no problem.
Nafisa, I actually have a question for you too. In
Okay.
this portion, I got a question from Deborah. She was asking on the PPP loan, how many times, like if it comes back around where you can qualify, where they'll have another round of those, can you qualify again? How many times can you do that? And how many employees do you need to have?
Okay, so with the PPP loan, you can qualify with just one. Like, for example, let me take that question first. For example, there are a lot of people who are self-employed. They don't have employees, and maybe they have people that they contractors that they hire that they pay 1099s for, but they don't count as employees. The only employees that count for PPP purposes are those who you pay payroll taxes on, who you issue a W-2 for. So if you're a self-employed person and you don't have that and it's just you yourself can still qualify for the PPP loan as well. So self-employed people or those who are independent contractors, they can apply for the PPP loan and they would just themselves be their employee for those purposes.
And
And then
so,
your second question, okay, did you have a question?
yeah, I was gonna say, and so if they are the employee, do they need to be W-2 even if they're the only employee?
No,
Okay.
no, no, they don't. If they if they're self-employed, they either have to use their Schedule C, which is their the business and expense income, like a profit and loss statement that they file on their taxes, as proof of income, or if they have it organized in some other type of form, they can use that like a LLC or something like that. But they basically that's what self-employed people have to submit as like their profit and loss statement to prove that they have a business and that they are actually employed and paying themselves. That's what it's based off of. And your second question was related to what was the second question related to?
How many times can you
Apply for the
for the
PPP.
PPP?
Right. So you can apply for the PPP. Right now they have it as two times, right? So if you applied for it previously and you got the PPP when they had it the first or the second go round, then you can apply for the PPP again the second time around. And the first PPP that you had would have been called your first draw. So that's the terminology. And then the second PPP would be called your second draw. So you can, if you qualify, can apply again if you received it previously. And again, you can get that forgiven as well. So you can get both loans forgiven. So that's definitely a plus with the business PPP. All
Yes,
right.
thank you so much. Thank you so much for the questions, Nafisa and Deborah and Salim. We appreciate you, submitting your questions. Happy we could answer them. I also wanted to say in reference to the PPP that Nafisa has a Facebook page about her business 360 where she really goes in detail about the PPP loans. So check that out if you have more questions. She really goes in depth with answering a lot of those questions that you have. So I will go ahead and move into the individual tax update. So again, Congress is doing really an excellent job in really working for the people. That's one thing I want to say. I want to put that plug in. We stress here about the importance of voting, and this is our voting. This is our Georgia stickers that are actually coming in handy. We go and we vote for these congressmen and women, and this is them, working on our behalf. They are really doing some things that are really benefiting the individuals and small businesses. So the first individual tax update is the stimulus payments. So the stimulus payments that we've received, most of us have received, are not taxable. So the $1,200 or $600, whatever amount you receive for your family, don't worry, you do not have to pay taxes on those stimulus. Okay, that is stimulus that was given to you. That is not earned income, so you do not have to pay. What they're doing is, if any of you did not receive your stimulus check or your stimulus payment, when you get ready to file your taxes, there'll be a section there that will ask you whether or not you received your stimulus. And the government has already basically determined what amount you were due. So what amount you were owed as a stimulus. So if you did not get your full amount, they will give you that as a recovery rebate credit. So you'll see that on your taxes. So they'll issue that as a credit. And if you are receiving a refund, then that amount will be added to your refund. So don't sweat it if you didn't get if you got the first one, didn't get the second one. Once you get ready to file your taxes, you should make sure you ask your tax professional, if you're eligible for recovery rebate credit. I have seen a few individuals where they maybe when they first received the stimulus, they did it based on their 2018 tax return where they may have only claimed one dependent. So now they're doing it based on your actual 2019. So they may have assessed an additional amount that you're due on your first stimulus payment. So just make sure that that you are asking those questions about that. Naima, you had a question, dear?
Yeah, although you're going to be getting a rebate credit, if you owe taxes, is that taken from the tax you owe, or will they still disperse a payment to you? Because to me, there's two different ways that people have received the payment. One was how everyone received it last time, was as an immediate measure to help people.
Mhm.
But now it kind of seems like, although if they're not getting the money and they have to get it taken out of their taxes, it's almost like a somewhat of a penalty for those who didn't receive it up front.
Nafisa, you
Right.
wanted to answer?
Yeah. Okay.
Mhm.
So there's uncertainty. There's no clarification on that, right? Because you're right and you're correct in the sense that when they originally gave out the stimulus payments, and with this time too, that they gave them irregardless of whether you owed or not. So even if you owe the IRS, they still gave you your stimulus check. So it was unrelated. So it's unclear, rather they have programmed it to give you, if you didn't receive your stimulus package, your stimulus payment for whatever reason, and it's calculated on your return, it's unclear whether you're going to receive that stimulus payment if you owe taxes. They haven't came out and said, what they're going to do about it, or whether they programmed their system to be able to do that or not. So we really don't know, and we probably know in the next few weeks, because the IRS just started processing tax returns on February 12th. So now that stuff is actually getting processed and people are actually going to be getting their returns back, then they'll be able to see how it's treated. But they didn't have any type of pronouncement or anything like that to say how they were going to handle that.
Mhm. Yeah. Okay. So the next the next individual tax update is sorry, is unemployment income. So many of us were affected by the pandemic and we lost our jobs, lost wages. So many of us opted to apply for the unemployment and received unemployment. And if you did receive unemployment, you do have to pay taxes on the unemployment that you received. So you should be receiving a form stating what you received in unemployment. Make sure that you file that when you file your taxes. You don't want them to come after you later about, unemployment taxes. So you will have to pay on that. Also, unemployment income is not counted as earned income. So if you usually receive the earned income credit, your unemployment income cannot be used for you to qualify for that earned income credit. However, I will say that what the government is doing is, if for whatever reason you didn't meet the threshold, the requirements for the earned income for 2020, they will allow you to use your income from 2019 to be able to qualify for the earned income credit. So there again, make sure that you are, we're informing you so that you can also ask those questions of your tax professional to make sure that you're getting, getting back as much as you can, or you're, reducing your tax liability as much as possible. Flexible saving accounts can be rolled over from 2020 to 2021. So if you did not, if you you are able to roll that over into 2021, and any expenses, I'm sorry, hold on one second. Nafisa, you want to speak on the flexible saving accounts, the rollover from 2020 to 2021?
Right. So ordinarily, when you have these flexible spending accounts set up with your employer, that you have to use it all by the end of the year. And these flexible spending accounts, usually people set them up for childcare, right? Childcare expenses. You have to use all your money in those accounts by December 31st, or you basically lose that money. So, since of course a lot of these expenses these are set up. Usually, people use them for childcare, and we had the COVID situation. A lot of people didn't have childcare expenses or didn't have as many childcare expenses. The bottom line is they weren't able to use everything that was in their flexible spending account. So, in order not to penalize the people, what they said is you can roll it over. So for 2020 and 2021, you'll be able to roll over any money you had left in those accounts in December 31st. You'll be able to roll that to 2021. And then for 2021, you're going to be able to roll it over for 2022. So that's just basically so people won't be penalized because of all this COVID of you not utilizing and having an opportunity to spend all the money that you had put into this account. That's
All
basically
right.
society.
Yes, thank you for that. Charitable deductions. This is another benefit to the tax update for this year. Normally, you are not able to deduct your charitable contributions unless you itemize. So what the government is doing now is they're allowing you to claim those charitable deductions up to $300 if you're single, up to $600 if you're a married couple, even if you take the standard deduction. So most of us, we, for the most part, we take the standard deduction. And a lot of people don't itemize unless you have, higher expenses, unless you have, medical expenses, or unless your expenses are over 18,000, because that's what the government basically gives as a standard. The average person will spend about $18,000 in those expenses. So if it's more than that, then people tend to opt to itemize their expenses. So these charitable deductions, you're able to claim up to $300, up to $600, even if you file as a standard. File with standard deductions. So that's definitely an added benefit that you all should take advantage of. I'm sure that we have all, paid our zakat, paid our sadaqah out, Muhammad schools, any type of school organizations, paid tithes. So these amounts are now able to be claimed as deductions on your tax return. So that's great. Retirement accounts and IRAs. I'm sorry, Naima has a question.
Can you clarify in real, more explanatory language what charitable deductions are? Are those payments or contributions made to nonprofit organizations, to startup organizations, just so that people are clear, they understand the difference, what a charitable deduction actually is?
Yes. So it's cash contribution. It has to be cash contributions for this one. This one is money that you paid out to a nonprofit organization. It cannot be like if you donated clothing to the Goodwill. That does not count. That does not qualify for this particular one. So it's only cash donations up to a certain amount that you made to a reputable nonprofit or a 501c3 business. So those are the ones that are that qualify.
Yeah, the GoFundMe. No, that donation, a GoFundMe donation to somebody's individual costs, to the funeral expenses or stuff like that, unless it's a registered nonprofit, 501c3 or one of the other nonprofit categories, those are going to be the only expenses that's going to qualify. Okay, people? No GoFundMe, individual causes.
Right. But so another really, really good one that really helped a lot of people out last year was the retirement accounts. So typically when you withdraw early from your retirement account, there's a 10% penalty that you have to pay. So what Congress did is they actually waived that penalty to allow people to withdraw funds from their retirement account to be able to kind of support them, or support their families during this time. So that is a really, really, that comes in handy for families. So another thing that they did is you still have to pay taxes on that withdrawal, on the funds that you withdrew. However, they did give you a certain period of time. They extended the period of time for you to actually pay those taxes. So I think it's 3 years that they have given you to be able to pay on those taxes for withdrawals that were made before December 31st in 2020. So that is a tremendous help to people. And there again, that's our vote, our Congress at work. We still need to continue to be vigilant. Still continue to, monitor what's going on. Continue to have these conversations. So that they know what is impacting us as individuals. We still have a long way to go. But that is most of what we have for the individual and the business tax updates. Do we have any more questions, ladies?
Yeah, I just want to make a comment right quick on this. This is a huge deal, and the reason why this is a huge deal is because most people contribute every month or every paycheck into their retirement accounts, right? And a lot of people dipped into those accounts in 2020 because of different stuff that was going on with their personal finances because of COVID. So the idea that not only are you not going to be subject to the 10% penalty, but you can take up to 3 years to pay that money back, right? So you can take up to 3 years to pay that loan back, which you basically paying yourself back, but pay it back. Or you could take up to 3 years, and whatever the regular tax is on that, you can spread that over 3 years. So that is huge. And we're going to be looking to see in this next package that they're about to pass, hopefully this week coming up or the next week, if they're going to extend that. Because remember, that was only for the distributions that took place. You had to already take that out by December 31st of 2020. So we're going to see it with this next package coming up, if they're going to extend that through 2021, meaning that if you need to, for whatever reason, during this year, have to dip into those retirement, if they will still let this apply for the 2021. So that's going to be interesting to see with this next package, if they extend that, since we still, for the most part, they're anticipating the whole pandemic to be extended through at least the fall, until hopefully, or maybe if everybody gets the vaccinations by then. So that's just a huge thing, because we've been contributing to that every single paycheck or every single month. So that's just a big deal for people to be aware of in terms of that.
Okay, Nafisa, I'm not sure. I want to kind of go back a little bit with the stimulus. We do have a question from Olivia. She was asking about, and I think you guys touched on it a little bit, but she needs some clarity on the taxes, if you have to be current on your taxes in order to receive your stimulus. And then I just had a comment from that, like, because I read something the other day about 20, if they were basing it on 2018 or 2019, that maybe, there's a big there was a big difference between 2020 for a lot of people and their income.
Right.
And so should they, and it was like a hurry up and go ahead and get filed for 2020 so that they could be more accurate. And so the question from Olivia, I'm sorry. My other computer decided to
I think I understand your question. I think I got it. I don't know why it's echoing. Okay, can y'all hear me clearly? Okay, great. Okay, so I think I understand what your question is. I'll take the second part first. The yes, they did previously base your stimulus payment on either your 2018 or your 2019 returns. So it's unclear, for example, when we get this next stimulus, the $1,400 is going to get passed, if they're going to allow you to base it on your 2020, right? It's unclear whether they're going to allow you to base it on your 2020, because previously, of course, it was 2018 and 2019, because I know a lot of people had different circumstances for 2020 than they had in 2019 to be able to get the stimulus package. So it's unclear. We won't know that until they pass it. But in terms of the previous ones, yes, it's nothing you can do about that. It's based on 2018 or 2019. And how it's actually going to work on their tax return if you did not get the stimulus for whatever reason, how it's actually going to work. They're basically going to calculate the amount of stimulus you should have received. For example, when you're doing your 2020 taxes or whatever, your software or your tax professional, it's going to calculate what you should have received, right? And then whatever the difference is, let's say, for example, it calculates that you were supposed to receive $1,800, right? That was $1,200 for the first time, $600 for the second time, but you only received the $1,200, not the $600, right? So then it's going to give you that difference, that $600 difference. If, for example, it calculates that you were only supposed to get $1,200 for whatever reason, but you got $1,800, you got both stimulus, right? You're not going to have to pay that difference back. So the only time it's going to really make a difference if you did not get the full stimulus, and you're supposed to get more, that difference. They're gonna issue that difference as a credit. But in terms of 2020, it's unsure whether the upcoming stimulus, if it's going to be based on 2020 or if it's going to be based on 2018 or 2019. It's unclear. So we'll see about that.
Okay, then I have two final questions. One is from Teresa. She said that she has a family member that was basically became homeless for 2020 because of COVID. And so basically they can't really file their taxes, right? And of course, they may have earned a portion of their income all the way, I believe she said, through April. So what happens when they can't file their taxes in time by April for this year? What happened? What do you have any scenarios as to what will happen? Will they get penalized for that? Or
well, let me just first say that even if you're homeless, it's not like I know a lot of homeless people, but most homeless people still have a cell phone. I mean, most homeless people, they still have a cell phone. So if you have a cell phone, you still can file. Like, you can file for free with the IRS up until, I think it's $72,000 or $73,000. So as long as you didn't make over, I think it's $72,000 or $73,000 this year for 2020, you will be able to qualify to file your taxes for free through the IRS website. All you do is go to the IRS website, you click on free file, and then it will give you the option, and make sure to select different software packages to process your tax return. So make sure you click one that offers the federal and the state, because some of them don't offer the state for free, okay? But you put that criteria in there, and it will tell you which one you qualify for. Usually it's several of them that you qualify for. And you just click it, and then you're able to do your taxes. As long as you have your phone, you can do your taxes through that for free, okay? Now, they are considering extending the deadline. Remember last year when the whole COVID first happened, they extended the tax deadline to July for you to be able to pay your taxes, be able to file your taxes without any penalties, right? Without any penalties. So this year they're talking about that in Congress, whether this next package they about to pass is going to extend the deadline to July. But right now there is no extension. So right now your tax return is due on April 15th. Now, if for whatever reason you feel like you're not going to be able to file by April 15th, you can file an extension, right? And so individuals, you can file an extension, and you can have till October 15th to file your taxes. And if you're a business, most businesses can extend their tax return through September 15th. And again, you can go to the IRS website and file for free, and you can click into those options. Okay. So that's something that's a huge deal. If for whatever reason you make more than that or you don't feel comfortable doing that, they also have what they call, which I'm not sure how they're doing it this year, but the Volunteer Income Tax Association, which are different usually nonprofit groups that set up to help people more one-on-one with their taxes, and they're called VITA, Volunteer Income Tax Association. And what you can do is normally they have these groups that are in person and in different sites set up that you would go to in person. But what you can do is you can go on the irs.gov site and maybe put in a search volunteer income VITA, VITA, and see what they come up with online, or if there's what they're doing to be able to assist people in that area. Because some people just don't feel comfortable, even if it is for free, of them doing their taxes, or they might have want to ask someone a question for free or something like that. So that's a resource that people can use in terms of that. And another thing I do want to mention right quick is for all those people who have tax debt, who owe the IRS. Either you owe the IRS for previous tax debt, or when you do your taxes this time, if you're going to owe. Don't forget they have the installment agreement, and that's something they can do online, where you can have if you owe, for example, $9,000 or whatever, you can apply for an installment agreement directly online through the IRS, and you can get that set up. You can also call them to set up your installment agreement as well. I mean, sometimes it's very busy. Sometimes you have to be on hold for a long time. But if you prefer to actually talk to a person, you can call the IRS as well. So you can either do it directly online or you can call them. And another good thing too that I want people to be aware of: if you already were on an installment agreement, right? And when you do your tax return this time, you're going to have some debt. So now you got another liability, right? If you can't pay that for whatever reason, they're going to automatically roll that into your current installment agreement. So you don't have to apply for another one, or you don't have to worry about being considered in what they call default. Because technically, when you have an installment agreement, you have to file your returns on time and you have to pay on time, or your installment agreement will be considered in default, right? And then you have to start the process all over again. So they're going to automatically roll that in this time if you are not able to go ahead and pay that full debt, if you can create debt on 2020. So I hope that's clear in terms of that.
Thank
Did
you.
I answer your question?
Yes, that did. Thank you.
Okay, great. So do I have any more questions? I do want to say too, another thing for those who do have debt: if, for example, you can't pay at all, for example, even if you got an installment agreement, you just wouldn't be able to pay it just because of your current financial situation, you can get with a tax professional. It's best to get with a tax professional and apply for what they call an offer in compromise, which is basically just saying that you can't afford to pay and that you would like to have it eliminated. You would like to have your debt eliminated, okay? And that is an application process. And keep in mind that when you're dealing with the IRS, especially now, they are severely behind. So that's not something that's going to be a quick fix. It's going to take it. Right now, they're on at least a 6-month waiting just to even get your stuff processed. So it is going to be a time-consuming process, but that is an option if for whatever reason you are not able to make any type of payments at all. So that is an option that I want people to keep in mind about that. So you can get with your tax professional to be able to assist you with that.
Last question. I mean, you just brought something up. So as the IRS is processing your potential
offer in compromise,
are you being taxed daily on the amount that you still owe?
Okay, well, what's happening is, as long as you owe the IRS, you will be incurring interest and penalties. Okay, so whether you're on an installment agreement with them, you're not getting any additional tax unless you just incurred additional tax for other returns, but your amount is increasing, because you are still being assessed interest and penalties. Until you pay them off in full, you will still be assessing that. It's just that when you're in offer and compromise, they're not going to seek any further collection action against you in terms of garnishing your wages or trying to levy your bank account once you submit your your offer and compromise agreement and you're waiting for your stuff to be processed. I hope that makes sense. Okay, great. So with that, that's going to be your tax update. And again, if you have any questions, you can contact me, Nafisa Fudayil, at Tax Roadmap through my website, or you can call me directly. And actually, we'll put the link to me in the comment section or in the comment section. You also can contact Daia. You can contact Daia, especially if you need your accounting services. Y'all know y'all business people, y'all need to get y'all books together. She's ultimate in that, as well as do tax returns, right? So if you need your tax returns done this time and you have a professional, whether you're an individual or business, she is a great person to add to your team to do that. So that's our update for today. And we will come out maybe with a mini one a little bit later if they pass this next COVID package and it has significant tax provisions in that. We will, as Rock the Crown, come up with a mini update just to make sure that our Crown Nation is informed in terms of taxes, because taxes affect the money, and we want everyone to be informed and not miss out on a lot of stuff because they didn't know. So we'd like to thank you for joining our this episode of Rock the Crown. You stay safe out there, Crown Nation. Peace. See you next time.
And don't forget to subscribe to us on YouTube, like us on Facebook, and follow us on Instagram. We will see you next time. Peace out.